try this all again. It is challenging times, and sometimes I'm challenged by technology. We're trying new things, and that's just the way it goes. Okay, welcome everybody. Property friends, Uwe Jacobs, property strategist, and Katherine with a big cough.
Oh, sorry, I thought I switched it off.
Apparently not. Katherine Isbrandt. We are really, really pleased to present you this webinar or seminar or information session, whatever you want to call it. Now, both Katherine and I have really enjoyed the panel session that we had last Wednesday with the 6 panelists. And we felt, all 6 of us felt that it was a great overview. However, what we need to do is to go more in depth. Now, half a week has gone by, and at the moment, half a week is a heck of a lot of time. Things change constantly, we're in flow. So both Katherine and I have bunkered down and have put in a substantial amount of work to provide you with the latest and greatest. And we've called this risk mitigation so that we can eliminate risk as much as possible. Okay. I have already introduced myself, Uwe Jacobs, property strategist from Property Friends. We provide solutions for people aspiring to financial independence, choices in retirement, or leaving a legacy. So having said that, Katherine, can I hand over to you, please?
Yes, good afternoon, everyone. Katherine Isbrandt here. I am money strategist and retirement planner, and I am the owner of the boutique business about retirement. So I primarily work with people that are either preparing themselves for retirement or the ones who already retired to improve their income, their assets, whatever the financial issues we see, that's what we try to resolve. So, and today, yes, I will be looking for at the issue of risk mitigation strategies from the perspective of my work as a financial planner. So hopefully that will give you the full picture between me and Uwe.
Absolutely, I'm sure it will. And what we would like to do is go through our, say, 20 minutes presentation first, download all the information to you, and then if you have questions in between, please put them in the chat window, and then we can answer them at the end. It just stops the flow too much if we do it all in between, it gets mangled up. Katherine and I are both very much intent on downloading the maximum of information that we can. By the way, I was a bit sick of the Melbourne weather, and as you can see, I'm sitting on the beach in virtual reality anyway. You
looks better than my office, doesn't it?
Well, actually, it's a green screen, and you don't want to see what my office looks like, but that's okay. All right, Katherine, over to you.
Okay, so when it comes to strategies about risk mitigation, really from my perspective, there are 2 ways how you can do this. You can either, so the first one I want to talk about is insurance. So if you, especially for people who are entering the property sector, if you buy an investment property, in most cases, most people have to straight away apply for pretty sizable loans. And unless you can self-insure, then meaning that you have sufficient assets at any point in time to pay off outstanding debt should something happen. If you are not in this position, and most people are not, then you should really pass on that risk onto third party. And by third party, obviously, I mean an insurance company. So in order to do this, you purchase an insurance policy for whatever type of risk you exposed yourself. And at that point, you sort of exchange the premium for the amount of cover that you want to be covered for. So, and I will just go through some of type of insurances that, especially as an investment property, you should consider or you should have. Because if you don't, then you're really exposing not only yourself, but your whole family and stakeholders into a lot of problems. So the very first one, which is very obvious, is building insurance. So as the owner of an insurance of the investment property, you are liable for building anything that happens with the building. So if the house burned down, that's your responsibility to rebuild it. If there is flooding, you are responsible for that. So most people can't afford just to take the money from their bank account. That's where you need help from the insurance cover. Just when you purchase an insurance policy, make sure that it actually covers you. So if you are in the area, if you buy a property in the area that is prone to flooding, make sure that the cover actually covers for that. Apart from this, big part of the insurance policy is obviously public liability. So if anything happens, if somebody trips over, if they break the leg, well, you need that cover. You, at the end of the day, you are responsible for that. If you own a property that is for your personal need, then obviously you also need a contents insurance. Now, one thing that I have noticed notoriously, in order to save a little bit of money on premium, people cut down on the cover. And it's all nice and beautiful until the moment you need the policy, the payout. So don't try to save, $50, $100 a year and cut down on the cover, because if you don't have sufficient payout and you can't rebuild your house, you are in trouble. If you buy a property that is rental, then make sure that you also have landlord insurance, because that will cover accidental loss or damage to buildings and contents. And also you can have, as a part of the policy, cover for any default on rental payments by your tenants. So I know for a fact that the government already pushed insurance companies to ensure that any covers that are in place. So right now, with the problems that we have with coronavirus, a lot of people lost jobs. A lot of people, our work has been cut down with hours. Some tenants may not be able to afford their rental. So you either come to the agreement with them, or otherwise maybe you can fall back on this type of the policy if you have that in place. If you buy an apartment or townhouse, then you should really consider also residential strata insurance. That's sort of known as a body corporate cover. And that covers anything that may go wrong in common property areas. So lifts, car parks, gardens, balconies, this sort of thing. And so that's really, and I don't think that you really have a choice at that point. Correct me, Uwe, if I'm wrong, but I believe if you buy in a property like this, you really need to be part of also of that insurance.
I would strongly agree with you, Catherine. There is, and I put that in as a question to you. I'd love to find your answer to that. We can ask that question. We can ask that question later. Anybody that doesn't pay for insurance is playing what I call reverse stats lotto. You don't want to win that game. So, it's just one of these things where the exposure is just too high. And you don't want your number to come up. So exactly. You really need to take that insurance out, and you really need to make that happen. It is a very small price for what we call sleeping easy.
Completely agree. Yes. I mean, for, when you really understand and you think about it, the premium that you pay is really such a insignificant amount
in the
pay
scheme
for
of
the
things, for
amount
sure.
of risk that you are covering and for the security that you provide for yourself, for your family, or anybody else that might be involved in this venture. So absolutely, that's a responsibility issue, really. So I fully agree with you. Now, when it comes to private health insurance, I would strongly, unless you really are under the pump financially, please do not do not cut out your private health insurance, not in this situation, because if you suffer coronavirus, I don't know whether that gives you any priority over other people, but most certainly your private health insurance will assist you at that point. So this would be like the worst time to try to save money on this type of insurance. So that's general insurance part. Now, I, as a financial planner, don't really deal in general insurance. So I've just prepared that earlier so I can, provide this information. But when it comes to the other part of insurance, which is your personal insurance, as important as the other, the general insurance that I've just listed, as important as this one is, personal insurance, I think, is when you decide to take on such a risk as a big loan for the property, $500,000, $1 million, it's not just your personal risk, it's the risk of everybody within your family unit or your business unit. And you really have to take on responsibility for every single person. That's your responsibility at that point. And I don't know how to explain this any other way. When it comes to life insurance and disability cover, those are the two policies that are absolutely a must when you take on this liability, such as a big loan to purchase the property. There are other reasons to have life insurance, of course, but because we are sort of more concentrated on property, that's why I keep saying about that. There are different types of life insurances. There are different types of, especially total and permanent disability. And the very important thing is, unfortunately, if you are not going to an advisor who is a specialist in the risk, please sit down and read PDS, read Product Disclosure Statement. Yes, I know, Uva, it's hell. Nobody wants to read that. This is like 250 pages of total gibberish. Nobody can understand that. But you have to understand what type of cover you're actually buying. And
can I interrupt you there for a second, please, Katherine? I'm just going to be blunt. It's hard to soar like an eagle when you're surrounded by turkeys. That's my statement. We cannot be the champion of everything. And that's why I personally, let's talk about me and my wife, we surround ourselves by specialists. By specialist advisor like Katherine, as a financial planner. Believe in me, I've been around the block a few times. I think I know a bit about finances and financial matters. And I have financial advice. I have accountancy advice. I have legal advice.
Exactly.
And so on and so forth. So in the scheme of things, that is very little money to pay for setting things up the right way. Did I say that slowly enough?
No, that's correct. That's very correct. And it's not just the issue of having the right amount of cover. You have to actually have the right cover for your situation. And a lot of people will have life insurance and disability cover within their superannuation. And that's okay, that's fine. But you have to understand that when it comes to this type of cover that sits within super, that cover is only good if it needs to be paid out to either yourself or your family members. If a beneficiary is supposed to be a third party, you have a problem because, and I will try to explain, when you have insurance on your personal name, something happens, you make a claim, providing you meet the requirements, claim gets paid out, everyone is happy, you go on with your life. Insurance under superannuation, you are not the owner of that insurance. You are just a member of the superannuation fund. The actual owner of the insurance is the trustee. So providing that you meet the requirements of the insurance will be paid out. But it's paid out to the superannuation. And then the trustee will look at the circumstance and will see, okay, has your claim met conditions of release? And what I'm talking about is Superannuation Act. And if it has, they will pay you out. But if it hasn't, the money gets stuck in a super until such time that you meet conditions of release. And I've seen a lot of situations where people made a claim, it was paid to the super fund, and it got stuck in there and people never saw the money. So that's the last thing you want. So this is where you need advice in the first place. Another issue with insurance is depending who a beneficiary is of the payout. The tax is a big consideration. And most people have no idea about that. So if it is to your family, you're fine. But if it is anybody else, then the payout either won't be made because the particular party cannot be a beneficiary at all under SIS Act, or otherwise it will be paid, but first, big portion goes to the taxman. Now, have you asked about this? Do you know about that? No. So those are really very important things if you are, in a situation where you seriously are looking to secure financially your family and everybody else involved. So yes, so my suggestion is really don't just go and buy any policy. Another type of policy is income protection, and in my view, income protection, every single person that relies on income should have that. Income is our biggest asset. We always say our home is our biggest asset, it's your ability to earn income. This is what is your biggest asset. And in a lot of situations, we don't really think about it. So just put yourself in a position where all of a sudden, and right now, a lot of people will experience that, where for the period of 3 months, they can't go back to work. The work was cut out. They're not getting their paycheck. What's happening? Now, a lot of people can't even survive 3 months because they don't have any security blanket. They don't have cash amount that sits in a bank account just in case for that reason. Imagine if you had an injury and you are unable to work for 6 months, 12 months, 2 years, 10 years. A lot of people would be in a big financial trouble. And most certainly the whole idea of building this wealth goes down the drain. So again, this is the type of policy that I think every single person should have. And listen, the premiums are tax deductible. So for everybody. So that's a big, benefit. And the tax office and the government has done it on purpose. So we really, include that security in our planning. Income protection will cover your gross income, so your pre-tax income up to 70%. And there are a lot of choices. And every single company will have different policy, different covers, different terms, different terminology. Please speak to specialists because, again, it needs to be a policy that is designed for you.
Can I jump in there again, if I may, Catherine?
Yeah.
especially as a business owner, income protection, I think is very important. Make sure that you have a good advisor, because with businesses, more often than not, your income varies per year. Some insurers look at that with very different eyes. If, let's say, last year I had, to pick a figure, any figure, $500,000 worth of income. This year is a bad year and I've got $20,000 worth of income. What is the number that I get paid as income protection? That is why you need a special.
Varies between every single company will look at that differently. And you really have to know inside out those companies to know exactly, just like mortgage broker will go and find the correct, the mortgage for you for whatever type of property and your financial situation. The same applies, the same logic applies here completely.
This is not about a sales pitch. It's about getting the right advice.
Exactly.
And as I said, if we don't set it up at the beginning properly, or more often than not, it cannot be undone or under big expense. So yeah, I fully agree with Katherine there.
Yeah. Now, one thing that I am extremely passionate about is, if you watch TV during the day, in morning shows and early afternoon shows, there are a lot of ads from different companies about insurance, and especially personal insurance. Now, I can't name companies because I don't want to be sued, but if you see those ads, you know exactly what I'm talking about. Please never, ever buy any insurance from those companies. They are selling convenience. They are selling what they call simplicity. Just give us a call, 5 minutes conversation, no medical checks, no paperwork, 2 minutes, blah, blah, blah. It's all done and we're happy. They get their big commission check. They have no responsibility for what they sold you. And you, in most cases, are buying a policy that is completely incorrect for what you need. Another thing, if you think that their premiums are lower just because there is no advice involved, I've just said those policies don't require medical checks. Do you know how much risk that particular company is taking on by not putting you through this? So they will average out the price through all the people that should never, ever be eligible for a policy, and people who are very healthy. So people who are healthy will overpay for that policy tremendously. No advice, in 9 situations out of 10, I would say incorrect policy. Don't do that. Go and speak with a professional insurance advisor. And you might not only have a policy that is correct for you, but also I wouldn't be surprised if premiums were not lower or wouldn't be higher. That's my point. Okay, so you can tell that I'm quite passionate about this because it drives me crazy when I see those ads. So this is my first part about insurance. Now the other part is diversification. And I think that when it comes to any type of investment, if you want to create wealth, if you really want to grow your assets, diversification is king. You have to do that. And the reason behind that is it's not only the case of growing assets across the board, but it's the very first strategy to reduce the level of risk and then reduce the level of volatility. I will say something that a lot of people in property don't like to hear, sorry, Uwe, but the difference with property is properties don't get valued on daily basis. Therefore, we really don't know what's the value of that property today and tomorrow and the day after tomorrow and so on. If you jump So that's why I always say, don't try to compare property to equities, to stock market. Stock market, you can check every 5 minutes, every 2 minutes, you can check the price. And that's just unfair comparison. And that's why we see equities as being so much more volatile, as opposed to in comparison to the property sector. They both are, they both have their plus, they both have their negatives, but they both are type of investments that everyone should consider. So if you, for example, have investments, property investments on your name, invest your superannuation in those other assets so you can create the overall volatility, reduce volatility, increase your diversity. And by different assets, I mean, equities, commercial property, you need money in cash. I keep saying cash is really necessity if you go to any type of, investing ventures. Bonds, mortgages, fixed income, or even precious metals. There are so many of them. Diversify. Then diversity is not only through assets, it's also through different types of industries. So you have banks and financials, and you have insurance, and you have industrial, and you have mining, and I can, go on forever. But look, for example, what happened after GFC. A lot of big part of market has returned, fairly reasonably fast. For mining, it took 7 years to get back to the value pre-GFC. So that gives you an idea. If you had all your money, all your super sitting with BHP, Rio Tinto, or whichever companies, from the mine, it would take you a very long time to see your money coming back, returning. So that's why diversity is so essential. Geographically, Australia is a very wealthy nation. One thing that I didn't know, that I just found out, that in 2018, Australians, on average, Australians, we were the wealthiest people on the planet. In 2019, Switzerland took us over. So bloody hell, we're number 2 now. But we still regard it as a very, very wealthy individuals per capita. So, it's something to be proud of. But we are still a very, very small economy. So don't forget that, there are big economies outside of Australia. We need exposure to that. There are economies that are what we call developed, and Australia is one of those. America, of course, Europe. And then you have undeveloped countries, and China is still regarded as undeveloped country. And then you have South America. There are a lot of countries that are really worth considering, that are growing and growing fast. And then you have big companies and small companies. And when it comes to superannuation, different fund managers, different investment styles, top down, bottom up, hedged, indexed. Where do I go with this? So when you put all of this together, it really requires a good level of understanding how to structure a well-diversified portfolio, because the idea behind that is you're not only able to improve on returns, but the very first thing is you actually reduce the level of volatility over long term. One more thing. Yes, Uwe. Am I over time? I can't hear you.
Good idea. If I unmute myself, that works better, doesn't it? I would like to keep pretty much to the hour, so yeah. We're running a bit short in time. I'm sorry, Katherine. Okay, all right. So basically, I almost finished. Whatever I had to say, I will just say some other time. That's fine. No. You can spend 2-3 more minutes. That's fine. Okay. I don't want to kill you off. I'm just making you aware. All right. Okay. So just the very, very last thing. I said before that diversity is king. Well, guess who is the queen? Compound interest is the queen.
That's my saying. I invented that, by the way, and I'm so proud of it. I know that everybody knows about compound interest, and I know that supposedly everybody understands that. But do you know how many people apply that? If 5%, 10%, that would be all. This is all big theory that we know about, but unfortunately, very few people apply. So I will create a separate email video about that, because I think that this is the simplest strategy that can be put in place that can really create a lot of wealth. And it's so underestimated, or I would even go as far as to say disregarded. So here we go. That's my part. I finished for today. Thank you, Uva, and off you go.
Well, look, that was great. Thank you very much, Katherine. I would like to go back to some questions, and cheeky me, I had one that came across my mind when you were talking about insurances, and I agree with you. There is a desperate need for insurances, and as far as I'm concerned, they're non-negotiable. Is there a point though? So let's say that I'm a property investor and I've got 20 properties.
Okay.
Is there a cutoff point in your mind, in your view, where one self-insures?
Well, I mean, in theory, it says that if your liabilities are lower in value than assets that you own, at that point, you can self-insure. But it goes back to you whether, if that happened, and you would be forced to sell some of those assets in order to pay off your liabilities.
Mm-hmm.
Are you being left with any assets at all?
Yeah.
So this is where you have to figure out at what point are you willing to risk what you've built up until now. And it really goes back to you at that point. But also the other thing is, obviously, the older you get, the more expensive the policies are becoming. So that's also another part of the issue that you have to take into consideration. But from the bank's perspective or insurance perspective, that's what they would say. Yes, so it's your call at that point, how much of the risk you're willing to take.
Thank you. Thank you. And yes, when we talk about insurances and property investment, I find it interesting that the mortgage company, the bank typically, specifies what the insurance value is that they want us property investors to insure for.
Mm-hmm.
And amazingly, that's always over the amount that they lend us. I don't know how that works.
Yeah,
So
well, I mean, the very first responsibility that they have is obviously to themselves, to cover, you know, whatever they, so they're not gonna take any risk. No company, no bank will be taking risk. The risk is all on you. And at that point, you have to find strategies to reduce that on your part, just like financial institutions are doing.
Yeah.
It's business, simple.
Yeah. Actually, whilst we talk about questions, Lenny, if I can get you to scan Facebook, and if there are any questions, just put them into the Zoom chat window, please, so that we can consolidate questions here. I'm sorry, I'm a mere mortal man. I can't focus on 3 different things at the same time, which are very conclusively. Sorry, Katherine, this is your chance.
Neither can I. I'm being honest.
Which I've very conclusively shown at the beginning. By the way, when we talk about advisors, and you can see that we take this serious, and if you want to, by all means, we can make the recording available of the big panel session. So tonight, Katherine, as the investment advisor, is speaking and I, as the property friend, as the property strategist, are speaking. We will bring the entire panel plus some back. So we will have 2 people each evening for the rest of the week speaking, because we figured it was just an insufficient amount of time, as we've just seen with Katherine, talking on a few major points only. It was just not enough time, and we want to make sure that you've got the tools in your tool belt to make good decisions. So that's the intent about it. Okay, so we will have the issue about the grants, what monies can be made available by the government. We will all have that covered by Paul Ray, the accountant. We will have the issue around mortgages, banks, what's happening there. I will touch on it briefly today, but heck, I've been only around 17 years, you know, and I know a fair bit, but I'm not the specialist in this area. So I'm not going to shoot off my mouth and give you the details of what's the best of the rest and what is best to be doing now in these ever-changing times. We will have Paul Humphreys back to talk about the self-municipalization funds and what is the tricks of the trade, how can we risk mitigate there. And of course, we will have David Forrest back. I am very, very proud that he is a member of our team. I mean, this is the national chairperson of First National. The amount of experience that we've been able to consolidate for you guys is second to none. Now, I have an ace up my sleeve. Peter Griffin has agreed to also join us on the panel. Peter is an extremely experienced property lawyer, up there with very famous property lawyers. Peter is a very private person. That's why he doesn't market his skills and abilities and moreover his knowledge widely. He's preferring to stay in the background and does magnificent work. Peter has been one of our choice advisors for over 15 years. So very, very interesting session. I'm personally looking very much forward to it. And I will also have an insurance specialist. I have already looked out who I want, but the person hasn't agreed yet, so I need to twist his arm a bit more. Whatever it takes. All right, so that's the overview as to what's coming up. I now want to focus a bit on property investments and the situation there. And again, I'll keep that fairly brief, just like Katherine. I'll provide some overviews. First of all, there's nothing more true than things are evolving and things are changing. Every day there's new announcements. Like yesterday and today in the morning, Scott Morrison, and our Prime Minister, announced that he wishes, well, first of all, there's a moratorium now, 6 months, tenants cannot be ejected or released from the property. So that is great for the tenants, and I do agree that we need to be considerate and compassionate, and Ulla and I had already discussed that. We are landlords ourselves. It's just the right thing to do, full stop. However, as a landlord, I also need to pay my bills. So that's where the banks come in. And of course, the tenant comes in as well, in as much that if there is genuine hardship, Ulla and I will be the first ones that will offer to help. However, some people may, and I'm not saying that they are, but some people may want to take advantage of this situation. So on the political scene, the statement was made that these two parties and the banks need to work together. Now, what does that mean? Well, details aren't out yet. So we need to sit back and relax a bit, and what I call let common sense apply, until such time that the details are coming out. Now, one thing is for sure, and I've already got that tip very loud and clear. If you do have a break lease, or if you do have, as a landlord, a tenant that wishes to reduce their rent, David also spoke about that. Please make sure that you serve the appropriate notices. Otherwise, your insurer may not cover you for landlord or building insurance. Again, the way that we do it, my wife and I do it, we have a team of advisors around us. I just copy everybody. And then I go, Mike, did that make sense? Or I come up with a question. And that's the way that I run it. Because quite frankly, in my books, a common decision is a much better decision. That happens like that in my partnership with my wife. And it certainly happens in business, where if I look at it from different angles, which every person is different, everybody looks at it different angles, it leads to a better decision. But I start to rabbit on. So let's go further. So that's the triangle of the mortgagor, the bank, the mortgagee, the landlord, and the tenant. Fair to say that will have to work itself out. I would suggest to everybody, be considerate, be relaxed, and make common sense prevail. Now, let's talk a little bit about the issue about the tenants and the moratorium on the not being able to evict a tenant, even if there is a breach. I'm not going to go into whether I agree with that or not. That doesn't matter. There's no good trying to fight windmills like Don Quixote. It is a given situation, so I roll with the punches. Now, fact of the matter is that, again, the details are not clear yet. I can promise you one thing, the government is not going to hammer a landlord to not evict a tenant that is unable to pay for genuine hardship reasons and will not give any relief to the landlord then. So what I'm saying is, again, make common sense prevail. In my view, things will work itself out. Now, there is, of course, a period of time until that is done, and that is the hardest part. Cash flow is king, especially in uncertain times. Nothing is more true. I'm sure Katherine will agree. If we have a tenant that is defaulting now and is not paying now, and our mortgage is due now, we got an issue. So let's cover that. Every bank is open to extensions of time to capitalizing interest. Now, let's be clear on that. If you capitalize interest, yes, you don't have to pay at the moment. And Katherine was speaking about compounding as being a great, great thing. It can be also a great danger, because if you compound debt, that's a big issue.
Yeah, that's a reverse compound, meaning that the bank is compounding on your inability to meet your repayments. So guess who is a winner? Correct.
So what Ulla and I have done is we've put the banks on notice, because simply I want to have the wriggle room. If we run out of steam, which is unlikely, but if we, I like to play it safe. If we find ourselves in a position where it gets tight, I want to be able to say to the bank, You ain't gonna get no money no more. ScoMo said we don't have to. I can't at the moment, so go to buggery. Not quite like that. Don't put it in those words. You know what I mean. So what we are doing is we're setting ourselves up for winning. We're setting ourselves up for options. So in regards to the banks, we are telling them at the moment, we are still okay, but we're putting you on notice that if we have a rent default, that will automatically mean a mortgage default. Of course, we will keep you informed, and then we have to compound the interest. Now, I just said the magic word in my books, and that is keep people informed. It's no good trying to set anything up, make any arrangements when the horse has bolted, as they say so beautifully in Australia. Speak to the banks when you can see that it gets tight, not when it is tight, when you can see that it gets tight. And that, of course, gets to the next point, and that is just, again, common sense, and it ain't that common no more. And I don't mean to preach to you, but I had to learn that myself, and I learned it over 17 years, and I'm still not doing it 100%. So here's the benefit of my learnings. Have forecasts, have figures written down, not in your head, written down. As far as I'm concerned, property investment is a business. And it doesn't matter whether I run one house or 150 houses. It is a business. The scale varies. But if you bunker down on 500,000 and lose that because the house burned down, you didn't have insurance, that is pretty hard to recover from. So treat it as a business. Please, please, please treat it as a business. Have your plan, know where you are, and know where you're going. I'm preaching to the converted, I know that, but that's the way that I think it should be run. Okay, that is pretty much all I wanted to cover. The main things is that the only thing certain at the moment is the uncertainty. Further details will be developed, and we will, both Katherine, myself, and the other members of the panel will have regular posts on our respective Facebook and websites. I know Katherine is very active in her blogging. So do check out the websites, and I believe that Lenny has or will put those websites in the chat, and we will also post them in the recording. Lenny, are there any questions that have come from me? Just having a look, no questions. Geez, I'm brilliant. Man, how do I do that?
Yes, I wonder, how do you do that?
I don't know. It's just a curse that I have to live with. No, it's dinner time, and I assume that people are only with one ear at this, and we'll wait for the recording. So that's all okay. All right. Is there any final words that you wanted to say, Katherine?
Well, all I can say is really, it is a difficult time, and it took us all by surprise. And believe me, I don't think anybody in a financial world was prepared for anything like that. So this is even more reason to take precautions and take very good advice. And you know, it will pass. We will go back to normality, and you will go back to your investing life. But yeah, if you are going now through any type of problems, any type of financial crisis, please, please, please don't forget about it. Remember and prepare yourself much better for the future.
Yeah. Yeah, look, I think that's the golden word. Forewarned is forearmed. May common sense prevail. And I personally am a contrarian. I still say it's a good time to invest when the shares are down, when the property market is a bit fearful.
That's another conversation altogether. I didn't want to start that part because you would not, I would not finish.
Good, good. So I shall not start it either. I'm just saying that when you can do property deals with 8% rental return plus capital growth, there are people out there that we want to look at that. Okay, look, it's been an absolute pleasure of mine. I'm sure it's been an absolute pleasure of Catherine's.
Thank you very much for invitation, Uwe, again.
Pleasure, pleasure. We trust you find this beneficial. As I said, tomorrow we will have 2 more panel members on the call, on the video conference at 7 o'clock again. We will continue and follow that through on Wednesday, Thursday, and Friday. So an action-packed, jam-packed week. Thank you for listening. Any questions, you can lodge them afterwards when we lodge the recording, and we'll be happy to answer that. On that note, have a good one.
Have a good night. Thank you, everyone.
Bye-bye.
Bye, Uwe.
Thank you.